All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today's June 23rd, 2025. And as you may have noticed by now, I am not in the office in the studio as usual today. I'm actually on family vacation this week, hence this genuine, authentic, totally real tropical paradise that you see in the background here. So you'll be seeing this for the next couple of mornings because we still got a show to do every day. And well, Jack goes on vacation. Hey, don't worry, nothing's ever going to happen, right? Oh, we just bombed Iran as soon as I went on vacation. So that was like the first thing that happens the second I leave the house. The much discussed strike on the Iranian nuclear facilities happened over the weekend. A fleet of B 2 bombers traveled all the way around the world, refueling several times along the way, and they hit the Natanz, Fordo, and Isfahan nuclear facilities. Those are the deep underground reinforced bunkers that pretty much only the United States had the capability of taking out. U.S. F 16s, F 15s, F 35s, F 22s, and B 2 bombers all took part, along with several recon drones, along with the refueling tankers. More than a dozen of those GBU 57 MOPs, or the massive ordnance penetrators, those are the big 30,000-pound bunker buster bombs, were dropped on these facilities, as well as multiple Tomahawk strikes from submarines in the Persian Gulf, as well as F-15s firing JASSM cruise missiles. That's the Joint Standoff Munition, the new cruise missile. It was basically show and tell for the U.S. Air Force. And look, everybody came home. It was very much one-sided. Iranian air defenses continue to sit this one out. Looking for a participation trophy, I guess. And now everybody's sitting there wondering, now what? What are the Iranians going to do? They have a couple of options. The first option, the margarine option, if you will, it's to strike at U.S. bases in the region, which they're probably going to do to one extent or another. There are some unconfirmed reports going around in the ocean channels this morning that there have been some attempted ballistic missile attacks on U.S. facilities in the Middle East. No confirmation, no images, no anything like that. So the other option is to shut down the Strait of Hormuz, something we've discussed on this channel at great length. That has not yet happened. There are no reports of any attacks on shipping. There have been some problems in the Strait of Hormuz over the last week or so since the Israelis started their air campaign. GPS scramblers have been used. We had two ships collided because the navigation wasn't working, and I guess people lack the ability to look out the window and make sure there's not a giant freaking freighter in your way before you change direction. I don't know, turn, maybe stop, just throwing it out there, just an idea. So the Strait of Hormuz has not yet been shut down. We have seen shippers are a little hesitant to use the Strait of Hormuz. We had a couple of ships last night did some abrupt U-turns and like, you know what, not going to do it, thinking twice, turn around and got out of Dodge. So we'll see what's going on there. There is some back and forth between the Iranians and the U.S. and China over whether that will happen. Debates about the impact it would have on China. There are some people who are talking about, oh, the Chinese get their oil from rail cars now, and so it doesn't matter if they close the Strait of Hormuz. Yeah, the problem is math gets a vote, and as Javier Blas is pointing out this morning on Twitter, the math does not jive with that whole, don't worry, we'll just get our oil by train. Yeah, good luck with that. Doesn't really work. And of course, the last and more pressing option is the prospect of sleeper cells being activated here domestically. Look, anybody who wants to just walk into this country, as long as you got a gallon of water, you can pretty much walk across the desert and get into this country, which means I'm sure the Iranians have people, material in place, and it's just a matter of what now. So we all have that to look forward to. But at the very least, it looks like this was a one and done. The U.S. is not taking part in any ongoing bombing campaigns. It was basically they hit those three targets. And although there was a little bit of saber rattling about maybe hitting additional targets, so far, none of that has happened. Now, the market just does not care. It's quite amazing. And, as Lynn Alden often says, nothing stops this train. And that is accurate this morning. We've got stocks. Futures were down about 1% last night when they first started trading, but now they're actually up a tick. You've got stocks are up. You've got oil a little bit higher, but it's like a dollar and change. We're still low to mid 70s here. I mean, the United States just bombed Iran's nuclear facilities. They're worried about the possible closure of the Strait of Hormuz, and oil prices don't care. This market is the most stoic, like, I don't GAF about anything at this point. Just number go up. That's all that's going on here. We've got yields and bonds are a little bit lower. So okay, we could say maybe that's a little bit risk off, but you're talking 1 or 2 basis points. Not really. There is no flight to safety going on here at all. Gold and silver actually flat to down a little bit. So there's no safety trade going on. The only thing that really moved since this started was Bitcoin. Bitcoin took a dive over the weekend, very briefly going below 100,000. Now we're back above 101 here. We're kind of bouncing around right at this six-figure level. But to be honest with you, the lack of a response anywhere else in markets tells me this move in Bitcoin has nothing to do with what's going on in Iran. It's more crypto specific. So I mean, it doesn't make for a real flashy headline. It doesn't make for a lot of clickbait, but that's the story this morning is nobody cares. This huge thing happened and nobody cares. That is the news this morning. Now there are a couple of other stories going on in heat wave in the press here and finance. Some things to watch. We've got a big heat wave is hitting the U.S. East Coast and the Midwest right now. Now, this is big. PJM, that's Penn Jersey, Maryland. They're the biggest grid operator in the United States, has declared a level 1 grid emergency. That's like a proactive measure. It's their lowest threshold of emergency. It means they are expecting the power grid to be taxed as soon as it gets a lot hotter today. And it's interesting because the PJM grid, that includes the North Virginia market. And Northern Virginia is the data center capital of the world. And we have built a ton of these things over the last few years, adding a huge amount of energy demand to the grid. And now we are entering our first real summertime challenge to the grid that we've seen. Really, they're expecting the biggest demand since 2011 as far as the heat stress on the grid. So it'll be interesting to see how the grid responds, what do power prices do over the next few days. We've also got some news in the buy now, pay later space. BNPL is going to start hitting your credit score. FICO or Fair Isaac Corp, they're out this morning with a new innovation in the credit reporting space to capture buy now, pay later loans, which is this massive source of consumer debt that typically high risk borrowers have been leaning on in order to make ends meet. And it's been almost invisible to the credit bureaus, which means the credit bureaus are not really doing their job of accurately measuring risk. And so they're trying to play catch up here this morning. We've also got Novo Nordisk has said we are not going to sell Wegovy, their GLP-1 fat burning pill, on Hims and Hers anymore. And so Hims and Hers stock has taken a dive this morning. Maybe those degenerate ads we all see on Hulu are going to start going away for once. Hey, God forbid the viewing experience improves any. What else we got this morning? More news from the China automakers. Auto dealers in China are demanding that China pay the cash back promos on their vehicles faster. Apparently, China's automakers, who have been very busy not paying their parts suppliers, have also been conveniently not paying the dealerships for all of these cashback promos that they offer. And really, all of this talk about how Chinese automakers are capturing market share and they're eating Tesla's lunch, and it's because they're lowering prices so much and they're just not paying their bills in order to sell cars at lower prices, which means it's not sustainable. And look, this Chinese auto space, it's starting to get an Evergrande vibe about it. Keep an eye on that story. We've got Oman is now the first Gulf country to charge income taxes. They're going to charge a small income tax on just the top 1% of earners. It's going to be very small. Yeah, we've seen how this plays out. Fast forward 50 years from now, and they're taking half of everything you do. But this could be a sign that Gulf states are getting ready for another price war in oil. And we've got Germany and Italy say they might want their gold back. That's interesting. That's one to keep an eye on. Got a lot going on this morning, guys. Why don't we shrink my big melon of a green highlighted head and let's see what is going on in the world of finance this morning. And well, look at that. Stocks are green this morning. Say it ain't so. I don't know how this is possible, but there it is, right before your eyes. The S&P 500 up by 3 points, 0.06% higher, despite, war. The Dow Okay, that one's a little bit in the red here, off by 12 points, 0.03% lower, essentially unchanged. And the NASDAQ up about 30 points or 0.14%, modestly higher this morning. So stocks are up. It is risk on. Go figure. The DXY, meanwhile, a little bit stronger. That is one thing that was reacting. We saw the dollar get a little stronger here, mostly because the yen is weakening this morning. We did get some more talk from the Central Bank of Japan this morning that they are going to be doing the issuing of fewer long duration treasury bills or JGBs, and they're going to be leaning more on the short duration stuff. So maybe that's contributing a little bit to the strength in the dollar here this morning, up 57 basis points or 0.58% higher at 99.27. And then looking over at the bond market, we got yields are lower, which you'd kind of expect with bombs and missiles flying. Yields will go a little lower as people buy bonds for safety, but they're barely lower here. Nothing is really reacting. The 30-year Treasury is lower by 2.5 basis points, 4.864% for the 30-year yield. The 10-year is lower by about 3.5 points at 4.340. The 2 years at 3.893. That's off by a point and a half. And the 1 month T-bills at 4.160. That's higher by a fraction of a point. But the bond market did not care about what's going on in Iran this morning. And commodities don't really seem to care. We've got the price of gold is actually down. Spot gold is off only by a little bit here, 40 cents. Yeah, we'll say a buck lower. Here it just went positive. It's flat. Gold is unchanged, $3,368 for spot gold. Silver marginally higher here, $36.03 for spot silver. Again, barely moving, but you know what? I like the shiny. We've got copper is lower by about 0.75%. Platinum is up by 1.5% this morning. Palladium is up by 2.25% here. Crude oil. This is kind of interesting too. We're bombing Iran, or we bombed Iran. We're not presently bombing Iran, but we did just drop some pretty big bombs on Iran. And oil is higher by 0.65%, 48 cents a barrel higher for WTI crude. Those are August futures, $74.30. Oil just doesn't care. It's really remarkable here. Now, the only thing that really did move over the weekend was Bitcoin. We talked about that. We're currently at $101,358 as priced on Coinbase. Now, yesterday, Bitcoin got pretty beat up. We hit a low of 98,225 yesterday. We bounced off that level. We're back above 100 here, but Bitcoin's now been selling off. We hit that high. The all-time high was on May 22nd. We had another run in the beginning of June, but now we've been selling off for about 2 weeks straight here, still holding that 100,000 threshold for now. But look, we got another interesting story in Bitcoin this morning. 5G chip maker Sequans, I don't know how you say this. It's a French name, but they joined the Bitcoin treasury strategy rush. Shares of the Paris-based company are 14% higher in the pre-market after announcing they're going to Michael Saylor. That's what they're doing. Let's see here. Telecommunications company Sequence has announced that it will raise $384 million to launch a Bitcoin treasury, according to a press release. The company has agreed to issue and sell $195 million in equity securities and $189 million in convertible secured debentures, i.e. debt. Our Bitcoin treasury strategy reflects our strong conviction in Bitcoin as a premier asset and a compelling long-term investment, said Georges Caron, the CEO of Sequence. Look, they're going to do Michael Saylor's strategy thing. They're going to borrow and issue stock to buy Bitcoin. They're going to become a Bitcoin treasury company. This is a small outfit. They have like a $49 million market cap. But the point is, guys, we're seeing a lot of these lately, right? It seems like almost every day there's another company that's decided we're going to be a Bitcoin treasury now. And the more companies participate in this space, the less of an effect it's going to have, because these companies are doing this because they typically get a premium. If they say we're going to borrow $100 million and buy $100 million in Bitcoin, typically their market cap increases by more than $100 million, or their market cap goes up. They trade at a premium to the value of the Bitcoin they're buying. So it's basically like a way to print free market cap. But the more companies do this, the less of an effect that's going to have. This space is becoming very heavily commoditized, and sooner or later, it's not going to work. And this is going to crowd out Michael Saylor, and this could be one of the things that contributes to what I consider the most likely candidate for triggering crypto winter would be some kind of forced selling at MicroStrategy, which I think will probably happen at some point between now and October. It could be somebody else that blows up this time, but I still think Strategy is the biggest candidate for FTX this time around. Meanwhile, we've got Iran's parliament has backed blocking the Strait of Hormuz. Its closure will alienate Tehran further. It's not really up to Iran's parliament, but they had a vote, a symbolic vote, and they said, this is what we're going to do here. Iran may be threatening to close the Strait of Hormuz, but experts told CNBC that it's also the one with the most to lose. In a major move after U.S. struck Iranian nuclear sites, the country's parliament on Sunday reportedly approved the closure of the Strait of Hormuz, risking alienating its neighbors and trading partners. The decision to close the waterway now rests with the country's National Security Council, and its possibility has raised the specter of higher energy prices and aggravated geopolitical tensions, with Washington calling upon Beijing to prevent the strait's closure. Vandana Hari, founder of energy intelligence firm Vanda Insights, told CNBC Squawk Box Asia that the possibility of closure remains absolutely minimalistic. If Iran blocks the strait, the country risks turning its neighboring oil-producing countries into enemies and risks hostilities with them. Namely, we're talking about the UAE and Saudi Arabia, which, remember, guys, it wasn't too long ago the Iranian-backed Houthis were firing missiles at the Saudis and at the Emiratis. So, I mean, this could potentially lead to fracturing within the Middle East. Not to mention the Chinese are a big player here. Now, a lot of people commented, I mentioned how the closure of the Strait of Hormuz would probably hurt China more than it would hurt the United States. And a couple of people chimed in the comments and said that wasn't true because China built this railroad and now they can get their oil by rail, circumventing the Strait of Hormuz, so it would only hurt the United States. And to be honest with you, that I knew about that rail line, but I never really considered it that big a deal because moving oil by rail car just does not make sense. And Javier Blas here, he's the head of commodities over at Bloomberg. He's making a pretty good point this morning. He's saying, no, Iran cannot ship any significant amount of oil to China by railway. Yes, I know you have read something about it online. It is not true. And guys, unfortunately, math gets a vote here. Now, Blas elaborates a little bit more on this post, a few comments down here, where he talks about how the average rail car holds about 700 barrels. And a VLCC, that's your big cargo, your big tankers, that could hold about 2 million barrels of oil. That's your big tanker ships. So to replace one single tanker, Iran would need 2,800 rail cars. A typical freight train hauls about 75 rail cars. So that would mean 38 freight trains to replace one single tanker, give or take, he's saying. And just pointing out here the logistics of it. Okay, sure, you built a railroad. Congratulations. It's neat. You cannot replace ocean-going freight with railroads. Moving it by ship is still by far the easiest way to do it. Pipelines is easier after that, then rail, and last but not least is truck. And I mean, I guess you could always put it in buckets and carry it there, but let's at some point, guys, logistics wins. Meanwhile, we are seeing a little bit of an effect on the Strait of Hormuz, not a big one, but some ships are already having second thoughts, regardless of what the Iranians do. U-turning oil supertankers cross Hormuz after avoiding it. This one was yesterday. Two supertankers, each capable of hauling about 2 million barrels of crude, headed through the Hormuz shipping strait at the mouth of the Persian Gulf, having performed U-turns in the past 24 hours. On Sunday, the Cause Wisdom, Lake, and South Loyalty entered the waterway and abruptly changed course, according to vessel tracking data compiled by Bloomberg. After a pause, both then headed back through Hormuz. One was almost through and the other entering it. Signals from each showed on Monday. The two vessels' movements into the world's most important oil-producing region come as shipbrokers and others in the oil tanker market report a cautious willingness to enter the stretch of water that's pivotal to the global oil trade. Separately, Greece's shipping ministry warned on Sunday that the country's owners should think twice about Hormuz transit and instead head to a safe port. Now, a lot of people have very astutely pointed out on Twitter and FinTwit recently that the best way to, or that the it won't be the Iranians who would actually shut down the Strait of Hormuz. It would be the insurance companies that shut down the Strait of Hormuz. I mean, the Iranians can lob missiles, the Iranians can send drones, but they can't sink every boat that tries to transit the strait. They can't even sink every fifth boat or every 10th boat that transits the strait. They'll run out of drones and missiles way before then. But what they can do is make it so expensive that the insurance companies won't guarantee those ships transiting the strait because it'll be too expensive, and therefore nobody will make the trip. It would essentially be a military induced economic blockade. And so you're already seeing this. I'm sure insurance was playing a factor here with these boats that were like, I might go through the strait, I might not. I turned around, I got scared. And then the boss calls up, he says, no, get your butt in there. Ultimately, they go through, but you can see the hesitance already here from these shipping tankers. Now, also an energy story this morning, and it's one worth keeping an eye on. Largest U.S. grid issues energy emergency alert for Monday heat. It is going to be hot today, guys. PJM Interconnection, which serves about 20% of Americans in the Mid-Atlantic to the Midwest, declared an energy emergency alert with power demand expected to climb to a 14-year high amid intense heat. This alert was issued in anticipation of tight conditions on the 13-state system as electricity demand is set to top 160 gigawatts this afternoon of June 23rd, which would be the highest peak since July 2011, according to PJM. Somebody let me know in the comments. Somebody out there is saying 1.21 gigawatts. I know it. The Eastern U.S. grid operator also called a maximum generation emergency to shore up supplies. For now, though, the company is issuing just a level 1 alert, its lowest. But Monday is expected to be the third day of a week-long heat wave in Washington, D.C. area. Nearby temperatures are expected to reach 99 degrees Fahrenheit, 15 degrees above normal. In Northern Virginia, the data center capital of the world, according to AccuWeather.com. And that's a big one there, guys, the data center capital of the world. So we have got a big heat wave. We'll be taxing the power grid that is now already heavily taxed because we built all these stupid GPU farms in Northern Virginia so we can have chatbots that tell us to put glue on our pizzas. Will the power grid be able to adapt to this? So far, it looks like, yes, they will be able to, but we'll see what happens when it gets hot around midday. Also, this is potentially a big one for you younger guys out there, anybody who uses buy now, pay later a lot. Choosing BNPL at checkout will now factor into your credit score. This loan type has been growing rapidly, but the credit scoring industry has puzzled over how to evaluate it. Credit scores will start to take into account the hundreds of millions of loans tied to the pay later option at checkout. Fair Isaac Corp, the company behind the most widely used U.S. credit score, said Monday that it would roll out a new model that factors into the scores the buy now, pay later loans used to finance everything from Gucci belts to groceries. Because these loans haven't appeared on credit reports, lenders were often blind to how much debt a borrower had already taken on. In April, Affirm began reporting all new loans, including its pay in 4 plans, to Experian, a move other providers are expected to follow. Factoring BNPL data into scores requires more than just feeding the numbers into the existing algorithm. Current scoring models penalize consumers for opening several new lines of credit in a short period. That would mean opening 4 BNPL loans in a 3-month period would cause a credit score to drop as much as it would if opening 4 credit cards in that same time frame, even though BNPL loans aren't as risky as these cards. So FICO is rolling out the new credit scoring model and offering it to alongside its current one starting this fall. Banks and credit card companies will evaluate the new data, but they don't have to rely on it. Though the scores will be available to lenders, it's up to the credit reporting bureaus such as Experian, Equifax, and TransUnion to decide when to make them visible to borrowers and lenders. So far, bureaus have decided to make BNPL data available to consumers, but they're waiting on more data before sharing them with lenders. And I got to ask, what the hell is the point of having credit reporting if they're not going to make the data available to the lenders? Isn't that the whole freaking point? So the lenders can measure how risky a borrower is. And if there's this massive source of new debt, it's in the tens of billions of dollars nationwide, is not getting reported to them, then that means the lenders are not accurately measuring the risk before making those loans, which means those loans could be mispriced. But don't worry, they're being packaged up in asset-backed securities and sold to your pension fund. What's the worst thing that could happen? Don't answer that. Meanwhile, Novo Nordisk ends collaboration with Hims and Hers over weight loss drug sale. This one is giving Hims and Hers stock a beating this morning. Novo Nordisk said on Monday it would halt its collaboration with Hims and Hers Health over the sale of weight loss drugs. The two companies had announced a collaboration in April for Hims and Hers to sell Novo's blockbuster Wegovy weight loss drug through bundled offering on a telehealth company's platform. Novo Nordisk said in a statement on Monday that direct access to Wegovy would no longer be available to Hims and Hers Health via the NovaCare pharmacy. Good riddance. I hate the commercials from this company. They're some of the worst ones since the Old Navy commercials of the early 2000s. Hims and Hers is down 17.25%. Let's refresh that one. Make sure we get an accurate mark here. Yeah, glad I refreshed it. Down 24.5% ahead of the opening bell. This thing is getting clobbered. So Hims and Hers stock not doing so hot this morning. Meanwhile, China's auto dealers urge automakers to pay cash back within 30 days. We got some deadbeat Chinese automakers out there, which goes nicely with the deadbeat Chinese real estate developers. Chinese auto dealers on Monday urged automakers to pay cashback incentives within 30 days to help alleviate their financial pressures. The China Auto Dealers Chamber of Commerce called for quicker payments after it conducted a survey that found it could take as long as 180 days for dealerships to receive the cashbacks. So when the dealership does these promo, oh yeah, 2,000 cash back at closing. Why don't they just lower the price of the car by 2,000? I don't know. They get creative like that. But it turns out that it's the dealerships that are fronting that cash. And then they go to the automakers and say, okay, I gave the buyer the 2,000 cash back. Can I have the money now? And it's taken almost a half a year for them to get paid. Meanwhile, the China automakers, they're not paying their parts suppliers. There's all kinds of problems have been going on. All kinds of meetings at the CCP have been happening, demanding the Chinese automakers stop with their BS. This price war that's going on in Chinese automakers, a lot of it is being funded by bills not getting paid. And if that doesn't change, you could have major financial breakdown in the Chinese auto industry. And this is just one more story. Dealers not getting paid back on top of parts suppliers. So keep an eye on the Chinese auto space. There is a reckoning coming there. Meanwhile, Oman plans an income tax on top earners in a first for Gulf states. And I'm just learning this now. Apparently, there are no income taxes in the Persian Gulf. That's amazing to me. But Oman is changing that. Oman has announced plans to impose income tax, becoming the first Gulf state to do so in an effort to broaden its sources of public revenue beyond oil. The 5% levy will take effect until 2028, but it only applies to annual income above 42,000 riyals, which is about $109,000 or above, state-run Omani news agency said late Sunday. That means only the top 1% of earners will have to pay the tax, according to the economy ministry. Does this sound familiar, guys? What was it, 1913 when we started the income tax for the first time, or 1911? Don't quote me on the year. But it was like, oh, don't worry, it's going to be very low, and only the super rich are going to pay for it. Fast forward 100 years, the government's taken half of everything you make in one way or another, whether it's income tax, sales tax, excise tax, some fee on your cell phone bill, whatever. They get half of everything you do. So yeah, Oman is now heading down that slippery slope. Don't worry though, 5%, only the 1% going to pay it. Yeah, okay. Minister of Economy, Minister of Economy Saeed bin Mohammed Al Sakri, that's a long name there, said the measure will reduce reliance on oil income by diversifying public revenue while maintaining social spending. No country in the oil and gas-rich Gulf Cooperation Council, which has 6 members, has income tax. For the likes of Saudi Arabia, the UAE, and Qatar, that's a big draw for foreign workers, and Oman's move will be closely watched by the others. Now, it's possible they're getting ready for a decline in oil revenue here, and that's why they're doing that. We've already seen OPEC Plus is increasing production, which, assuming things in the Middle East don't continue to crash and burn, which is a pretty big assumption, but let's say hypothetically the war situation calms down, oil prices would be heading sharply lower because of the increasing supply and worries about a global recession. And so Oman is trying to diversify their government income here with the income tax instead of just the nationalized oil company. Although the top 1% of earners in Oman, almost all of them make all their money from the oil industry anyway. So at the end of the day, the money's coming from oil one way or another, but they're trying to diversify. And last but not least, Germany and Italy pressed to bring $245 billion of gold home from the U.S. You all remember that story about that time that the French sent a air quote battleship to the United States to get their gold back? Well, maybe Germany and Italy could be following suit. It's not decided yet, but they're pushing for it. Trump's attacks on the Fed and growing geopolitical risks reignite public debate about repatriating bullion. Germany and Italy are facing calls to move their gold out of New York following President Trump's repeated attacks on the U.S. Federal Reserve and increasing geopolitical turbulence. Fabio De Masi, and a former something MIP who joined the left-wing populist BSW party, told the Financial Times that there was strong arguments for relocating more gold to Europe or Germany in turbulent times. Germany and Italy hold the world's second and third largest national gold reserves after the U.S., with reserves of 3,352 tons and 2,452 tons, respectively, according to World Gold Council data. Both rely heavily on the New York Federal Reserve in Manhattan as a custodian, each storing more than a third of their bullion in the U.S. Between them, the gold stored in the U.S. has a mark-to-market value of more than $245 billion. Let's see, we need to address the question if storing the gold abroad has become more secure and stable over the past decade or not, said Gal Whaler to the Financial Times, adding that the answer to this is self-evident as geopolitical risk has made the world more insecure. The Taxpayers Association of Europe has sent letters to the finance ministries and central banks of both Germany and Italy, urging policymakers to reconsider their reliance on the Fed as a custodian for their gold. Now, look, no gold is moving yet. They haven't made the decision to do this here, but they could. They're talking about it. And, well, let's just assume that the New York Fed actually has the gold, right? That should be a safe assumption, much like it should be, asterisk, should be a safe assumption that all that gold is really in Fort Knox and that it hasn't been secretly sold off over the last 50 years. We don't know because nobody ever opens the freaking door and looks. We just all say, nope, don't worry, it's in there. Schrodinger's gold. It is both in the vault and not in the vault at the same time until you actually observe it. So that could potentially cause a ruction in the gold market should that come to pass. And I just want to say, well, what's going on? Why is my thing not working here? I am having, yeah, you know what? StreamYard is kind of giving me a hard time here. I don't know if I'm going to be, yes, I can do it. All right. Hunt and Cover, thank you, brother, who says vacation coffee for you and Gigi. Thank you so much, Hunt and Cover, for the good vibes and for the vacation coffee and my disappearing coffee cup here. I don't know why when I hold up my coffee cup, it disappears. And ow, that really hurts. So I have to hold my coffee cup into my face. This is my travel Yeti for today. Thank you, Hunt and Cover, for the good vibes and for the coffee this morning. Appreciate that very much. Zeeble Fritz, what's going on, brother? He says, plan to revalue gold to buy Bitcoin. What do you know? You know, that's kind of an interesting take there. I don't know that they would do both, but the government is pondering both here in the States, aren't they? They are talking about revaluing gold. The United States gold reserves are currently valued, what, at $41 or something, I think they have it stored at. And so if you were to mark that to market, it would be 3,350 or so, whatever it is this morning. Now, look, the thing with gold revaluation is it's basically just money printing because what they say is, okay, we've got the gold and it's in the vault and it's now worth 3,350 instead of 40. And so just deposit so many $billion into our account. And the Federal Reserve will print that money and deposit into the Treasury General account. So gold revaluation shouldn't directly drive gold prices higher. It should just result in more monetary debasement, which may send gold prices a little bit higher. And it may send a signal to the market that the U.S. fiscal situation is getting even worse, not getting better, which, yeah, that's probably going to happen. And so that could send the gold price higher. But a revaluation of gold wouldn't directly bid up gold prices. It might indirectly trigger a run higher in prices, though. But that is interesting to buy Bitcoin because, you know, we've got the whole strategic crypto reserve idea that has just been passed. By the way, we still haven't heard a lot about that. Weren't we supposed to have that report from the King of 2 weeks a long time ago? We still don't have any clarity on what the strategic Bitcoin reserve is going to look like. Is it going to be made up of just seized assets? You know, a drug dealer gets busted, his Bitcoin goes into the reserve. Or is it going to be the U.S. government is actually going to be buying Bitcoin And that's kind of crazy because if the US government does actively buy Bitcoin, it means they're buying Bitcoin with printed money. And so they'll be printing money to bid up the price of Bitcoin, which is stupid. All right. It's like the government adopting Michael Saylor's infinite money glitch. And my God, Satoshi Nakamoto would be freaking out, spinning over in his grave, assuming the guy's dead. Nobody really knows who he is. But the whole reason we created Bitcoin in the first place was because they printed so much freaking money after the GFC. So now they're going to print money to buy more Bitcoin. It's the ultimate infinite money glitch. It would be grotesquely reckless if they decide to do that. And they might decide to do that. And the fact that they're even considering it is crazy. Uh, I don't know that they're actually going to do it, Zeeble Fritz, but hey man, it's the 2020s. We got 5 years of this decade left. Let's not rule anything out. Thank you for supporting the channel, sir. And thank you to Pigo's Trading Desk for supporting the channel. It says US will close the strait. Nord Stream 2.0 and Japan loses. Interesting, a closure of the strait. Japan, a big importer of oil. They import almost all of their oil and they pay for it with yen, or they pay for it with dollars, but they need to pay for their dollars with yen. An interesting take that the closure of the Strait of Hormuz could ultimately punish Japan. And if it punishes Japan too much, it could punish the United States by triggering the unwind of the yen carry trade. And there's Michael Gayette out there saying "few" somewhere. Interesting take there. Now, Nord Stream 2.0, that's also interesting, referring to the blowing up of the Nord Stream pipeline, which to this day I still think it was us that did it. When I think of who benefits, the United States benefited more than anybody from the Nord Stream pipeline blowing up. So that doesn't shock me to read that. Now, that being said, the destruction or the blocking of the Strait of Hormuz, in my opinion, would be more economically destructive than the Nord Stream pipelines being sabotaged. I just because it affects everybody, right? The Nord Stream pipeline being blown up disproportionately affected Europe, and it caused a lot of trouble for European industry. It didn't affect the United States so much. We sold a little bit more LNG. It didn't really affect the Asian markets that much, although they had to compete for that LNG with the Europeans. But blocking the strait, 20% of global oil flow, you better believe that's going to make a mess in everybody's backyard. Especially China. But you know what? The Japan angle, that's a very interesting thought, Pigo. I had never really considered the impact on Japan. I like the way you think, sir. 100 million melon coin to Pigo's Trading Desk. Thank you, sir, for supporting the channel. And thank you, everybody, for having your coffee with the melon heads. I'm not in the office, so I don't have my soundboard. I can't trigger the outro music here. But I can say thank you guys for the super chats and for supporting the channel. I appreciate that very much. Also, don't forget that like button and that subscribe button for the algorithm. Thank you also to my Patreon supporters and my magnanimous melonheads on YouTube for supporting the channel. You guys rock. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big. And I can't even end this thing. We're still live here because StreamYard is glitchy. That's great. All right. We're going to end the stream one way or another. See you later, guys.